And you are good.
Okay, roll call. Richard Balducci.
Here.
David Blitz.
Here.
Elise Gray Kemp.
Here.
David Jimenez.
Here.
Joanne Ryan.
Here.
And Ari Santiago. Okay, we have a quorum.
Yes, thank you for that. First item on the agenda is approval of the previous Finance Committee meeting on February 16th, 2021. Is there a motion?
So
So move. Second.
Motion made, seconded.
Second.
Thank you. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed? Minutes are adopted. Approved, excuse me. Then we have two information items and one action item. And the two information items are the community college merger update and the federal stimulus fund update. Why don't we begin with that, Ben, to discuss those two items, beginning with the community college merger update.
Ben, you're muted.
Yes, yeah, I got that. Thank you. I'm sorry, I'm juggling a couple of tasks. I'm going to turn it over in just a second to my colleague, Carrie Kelly, who's going to the merger update. I just want to put this in a little bit of context for you all. As you know, several times over the last, since I've been at CSCU, we've provided the board with a multi-year projection of our efforts on Students First. I believe that now that Carrie has taken over as the CFO of the merged college, the quality of the work has improved significantly, and she took the opportunity this year to do a real full review of all the features of our projections. I believe that she has done admirable work in trying to reflect our best information about the recent past and to project that into the near future. She has had to deal with the significant technical challenges that come from the pandemic on our system, both in terms of enrollment and its finances this year in particular. So I think she's done a very good job of addressing that concern, as well as real new information that we've garnered from more time carrying this out. So I'm going to run the slideshow for Carrie, and she's going to run quickly through that, and then we'll be able to take any questions. So see if I can.
Well, great. Thanks for that, Ben. Good morning, everyone. My name is Carrie Kelly. I'm the Interim Vice President for Finance and Administration, the Chief Financial Officer for the Connecticut State Community College. As you know, in 2018, the board adopted Students First as a way to combat declining enrollments, unacceptable student outcomes, and provide fiscal stability. This is an update to the fiscal projection originally done in 18, and it contains actuals for the period 18 to 20, estimates based on the mid-year spending plan for the current year, and a 5-year forecast from FY 22 to 26. We've prepared this for the Finance Committee today, and we'll be presenting this tomorrow to the Legislature's Higher Education Consolidation Committee, and ultimately it will form the basis for our report to NETCHI. Currently, 6 of our 12 colleges have negative reserves. The colleges have been experiencing enrollment decline since 2014, and has been further exacerbated by the pandemic. Enrollments are down 31% since 2014. We have a structural imbalance. Our revenues do not keep pace with expenses. The majority of our revenues, 70%, come from state appropriations. Though the General Assembly has been generous and maintained support while many other states have decreased support to public institutions of higher education, the level of support we receive does not keep pace with our expenditures. We know that we can't raise tuition to solve our financial problems without sacrificing affordability and our commitment to access and equity. Most of our expenditures are fixed costs, and they're very difficult to reduce. 84% of our expenses are for faculty and staff, and that comes in the form of wages and fringe benefits. Operating 12 campuses means there's a lot of duplication across the colleges, and the status quo is broken and unsustainable. Next slide. This slide is a comparison of our baseline revenues and expenditures. This is what the future looks like if we take no action, if we don't unify into a single college. The stacked bars show our revenues. The dark blue represents the tuition, and the orange and gray are funds we receive from the state. Orange is our block grant, and the gray is the fringe benefit support we receive. The key to this chart is the green line. This shows our actual and forecast expenditures. As you can see, if we maintain the status quo, our expenditures outpace revenues, and by 2026, this produces a deficit of $43 million a year. Again, the status quo is unsustainable. Next slide. Students First and PACT, our debt-free community college program, provide a pathway to fiscal stability. It's a revenue and expenditure solution that improves student outcomes and helps us better fulfill our mission. We've taken a conservative approach to our revenue forecast, where we are projecting baseline enrollments that have a minor bounce back next year due to the pandemic, but the overall outlook is negative through FY26. We attract new students through PACT, and we improve our retention of existing students through guided pathways. Through Students First, we're able to reduce our non-student facing expenditures. We do this by eliminating duplication of services, by aligning staff with our organizational needs, by implementing shared services, and by achieving economies of scale. This does not impact faculty and teaching. The graph on the right shows how Students First improves fiscal stability. This analysis disregards the federal COVID relief funding, and instead we're focusing here on the net results from operations. This is the difference between revenues and expenditures. A negative value means expenditures exceed revenue. The gray line shows the baseline or status quo fiscal results. As you can see, it does not break even, with increasing annual deficits into the out years. The dotted green line shows how implementing Students First improves outcomes, and by 2024, we have permanent positive fiscal results. Next slide. Let's take a closer look at how PACT and Students First improve both revenue and expenditures. The blue lines show the baseline, and the orange dotted lines show how things improve under Students First. On the left, we have a snapshot of revenues, and you can see how the dotted orange line of Students First improves revenues. And similarly, on the right, we have a look at expenses. Again, the dotted orange line shows how we're able to successfully reduce expenses. Next slide. I want to focus on enrollments a bit because that's a key part of our revenue. This chart shows enrollments from 2014 to 2026. The blue bars on the left show the actual enrollment. And you can see that in 2014, we had a robust enrollment of 33,800 FTE. We've experienced a 31% enrollment decline. The orange bars on the right show our baseline enrollment projections into the future. So the blue lines, the blue bars on the left are actual baseline enrollment, and the orange bars are what we forecast our baseline enrollment to look like into the future. The green line shows that baseline enrollment trend through the whole period. You can see that in FY22, there is a little pandemic bounce back, but overall, the slope of that line continues. It's a negative outlook into the future. Under the status quo, our enrollments are at a threshold that is fiscally unsustainable and jeopardizes our mission. Through Students First, we implement guided pathways and retain more of our students, adding to enrollment. That's reflected in the gray bars. And through Students First, we build enrollments through PACT, our debt-free community college program, and that's reflected in the yellow bars. Next slide. Guided Pathways is an investment in improving student success. It enhances persistence and retains our students. It implements the holistic case management advising model, which it will achieve a 250-to-1 student to advisor ratio. We'll be hiring 175 advisors over 3 years, and we're well underway, and we'll have 35 advisors in place this spring and have rolled it out on 3 campuses. The chart on the right compares the cost of implementing guided pathways with the anticipated revenue achieved through retention. The orange bars show the cost, and the blue bars show the revenue. As you can see, this is a significant investment, particularly upfront. By 2025, guided pathways starts to pay for itself, and we'll see a net benefit to the bottom line. And perhaps more importantly, more of our students will be achieving their educational goals. Next slide. Building the one college has costs. critics have said that abandoning Students First will achieve enough savings to solve the structural fiscal problems of the community college. That's simply not true. As you can see on the chart on the right, the blue bars reflect the administrative costs. These include things like the executive staff of the one college, the 12 staff of our 3 regions. It includes over $400,000 in the current year for faculty stipends to help align the curriculum with even more money next year. It includes over $900,000 next year to convert 36 classrooms to high flex classrooms. That's 3 classrooms per campus. It includes funding over 4 years for an initiative with Achieving the Dream to engage in evidence-based institutional improvement to enhance student success and close the achievement gap. These investments allow us to build a structure that strategically manages the administrative savings as shown in the orange bars. The first 4 orange bars on the left show the actual attrition savings we've achieved, as well as our forecasts into the future. Next slide. You can see by the table on the right, we've been experiencing attrition of non-faculty staff. We've been able to capitalize on this attrition because we have a plan for the future. Through Students First, we've been able to replace vacancies with lower cost positions aligned with our new design. For example, as vacancies occur among campus presidents, they have been replaced with lower cost campus CEOs. When brought to scale across the 12 campuses, this alone will save over $1.5 million annually when including fringe benefits. And these are recurring savings. They build cumulatively into the out years. By unifying into one college, we eliminate duplicated positions across 12 campuses as vacancies occur. And through Students First, we are implementing shared services for back office functions like HR and purchasing, allowing us to achieve economies of scale. Next slide. Our fiscal forecast into the future has changed since originally envisioned. First, and probably most significantly, the pandemic has negatively impacted enrollments, revenues, and increased COVID response costs like cleaning and technology. On a positive note, it also has provided significant federal COVID relief funds. Second, we also have the benefit of actual results. If you look at the chart on the right showing the original forecast in blue with the updated forecast in orange, we are managing to the plan and had even better results in FY20 than anticipated due to strategic attrition management. The original forecast projected fiscal solvency by FY22, and under the revised plan, we'll have positive fiscal results in 22 because of the use of federal COVID relief funds. But due to the pandemic and the revised enrollment assumptions, we will not achieve permanent fiscal stability until FY24. That concludes my report, Mr. Chairman. I'm happy to take any questions members may have.
Rich, you're muted.
Thanks, Carrie. We appreciate that. Very nicely done. Members of the committee have comments or questions? Anyone?
Yeah, this is David Jimenez. Ben or Carrie, what exactly do you surmise is the most significant criticism or skepticism about your logic related to Student First? I mean, as you lay it out, Carrie, it looks pretty compelling, but I'm guessing that there are counters to your arguments, and my hope is that you know them better than I. So what exactly, or Ben, you've been around a long time. So what exactly is the criticism, and why doesn't your presentation identify the criticism and explain why the criticism is either wrong or has no merit? I don't want this one-sided view of everything looks exactly the way we envision it for Student First. I want to know, what is it that the faculty union or everybody else out there, the student constituency, say is wrong with your presentation?
Well, I'll take a quick stab at that first, Carrie, and then maybe you can. I think that the area in which we are making the most assumptions and where we are most likely to be wrong, because we are predicting the future, is in the area of how our guided pathways effort in particular will impact enrollment. There has been some evidence about the increasing enrollment in with the implementation of guided pathways at several community college systems, sort of broad at-scale implementations, where they have improved retention and persistence rates among students. And that really is what drives a lot of the enrollment improvement. So if we keep students around for more credits before they complete or leave for whatever reason, we will increase enrollment that way without having underlying change in the demographics that feed our system. That is something that I believe we have done a good job of predicting. But again, that result is going to be the outcome of hundreds, if not thousands, of interactions between our advisors and students in which their behavior is modified in some way to improve outcomes for them and for the system. And so there is a considerable risk in my mind that will, there's a risk that we'll do better than we think. I put that out there. I think we've been conservative, but we are predicting an outcome from a very complex undertaking that is intended to change the behavior of students to help them persist in school and to be more successful. So I freely acknowledge that could not work out the way we had envisioned, or that it could take a longer period of time for those results to appear, or frankly, that those results could be mixed, that certain schools do better than others. So that is one area of concern for me. I will tell you that my understanding of the criticisms fall in a couple of categories of the plan. One is that they believe it is antithetical to their values around higher education, that there would be control outside of the local campus environment. And that is a criticism that I am not in a good position to respond to. I don't personally agree with it, but I understand that others may disagree. With respect to the finances, there's been criticism that somehow this plan doesn't work financially. I will be the first to say that in a complex organization, it might work a little differently than we had imagined, but the basics of the financial underpinnings of this plan are sound. It has worked from between 2018 and today. It has generally accomplished. We've been able to accomplish using strategic management of our attrition and reorganization of our back office functions. We've been able to achieve the spending reductions that were envisioned in the original plan. I believe that while there are some additional, getting right into the middle of this plan, there's a lot of work that's going to happen next year and the year after in order to make this come together. Those make me anxious, and I wake up in the morning thinking about those things and how we're going to make sure that they happen. But we have been successful so far in meeting those objectives, and I believe that the objectives we have laid out for us over the next couple of years are also accomplishable. And I think that the criticism that we are making up the numbers, or that the results so far have not been successful, are unfounded and not supported by the facts that Carrie has just presented to you. I don't know, Carrie, if you have any thoughts to add to that.
No, I think the only thing I would add on the expenditure side is that we have used actual data of attrition savings in the period 18 through 21. And so we know that in FY22, there's a significant incentive for many of our eligible employees to separate. There's a significant attrition savings assumed in that period, and we believe that in FY22 there'll be a higher rate of attrition, and then it will normalize in the period after that, because the pent-up demand will sort of be exhausted in FY22. So we assume a peak in 22 and then it sort of normalizes. But you have to remember that any of these savings we achieve are cumulative in nature. So we've made some assumptions around that based on the enrollment and based on the retirement incentives in FY22. So that's one of the other potential assumptions we've had to make moving forward.
David, Blitz, question.
Well, I'm glad that the other David brought up this question of criticisms, and let me just mention several of them. but I'll begin with one which is not directly financial. CFO Kelly's report, I found it very interesting, and I thank her for it. You mentioned that this Students First does not impact faculty in teaching. That is one of the major problems. There's two major problems. I'll talk about them one after the other. All of the proposals that faculty have seen involve loss of faculty control over curriculum, either through the so-called alignment of 400 to 600 programs, basically under the direction of the system office and system office staff, or the elimination of department chairs and the designation of associate deans and deans to be in charge of curriculum. That's quite clear to all of the faculty who are involved in the criticism of this plan. So let me call that under the general rubric of faculty control over curriculum. And it seems clear to the faculty that Students First has as a consequence their loss of control over curriculum. That's a baseline at any institution of higher education. Secondly, the elimination of individual colleges. There is considerable loyalty that faculty and students and alumni and various individuals in the surrounding areas to these colleges have to those colleges. And there's a lot of skepticism that not this board, but some subsequent board, once the individual colleges are gone, can in fact begin to eliminate one and more of the campuses. So that, let me call that the elimination of individual colleges. Those are two: loss of control of loss of faculty control over curriculum, loss of the elimination of individual colleges. Those are the two major problems. Now, if we look as objectively and as unbiased as I can at this, remember, I'm a university faculty member, I'm not a community college faculty member. Nonetheless, there has been some things which, and I mentioned this at the last meetings, I was interested by the reports from the 3 regional presidents. You have eliminated presidents at the community colleges and replaced them with CEOs. Presumably, that will give you greater flexibility in terms of reallocation of budgets and also regional sharing and of resources. Those may well be two positive aspects. And let me say that I think there are some positive aspects to Students First. Regionalization in the state like Connecticut, which tends to extreme localism, I think that could be a very good thing, especially in terms of eliminating the inequities we know exist based on socioeconomic and ethnic and racial considerations. So we should be, and my motto here is review and revise. What are the strengths and what are the weaknesses of Students First? What are its accomplishments to date? I mentioned 2 of them, changing the presidents into CEOs and the regional presidents and the possibility of sharing resources that implies. What are the negative aspects? The elimination of the individual colleges and faculty loss of control over curriculum. Those have to be balanced out. So let me stop at that point, because I don't want to take too much of your time. But I think that we need to look at this as any complex organization has a central level, regional levels, and local levels. What we have had here over the last 3 years is over-centralization, which is, I think, a negative fact, and that can be seen in the increase in the size of the budget, not apportioned directly to campuses. And I've mentioned this on a number of occasions. It's grown from $30.3 million in 2017 to over $69 million, including shared services, for the 2021 proposed budget. At the regional level, I think some progress may well have been made. At the local level, the opposition is to what I call delocalization. To properly have a functioning of a complex system like CSU, I think we need to balance the central, the regional, and the local. And right now, that is significantly out of balance as a result of Students First. I think it can be corrected, but if the attitude is 100% student first or nothing, and many of the faculty think nothing, they want to go back to a status quo ante, which I don't think we can return to. And I don't think we should return to that. There have been some positive developments as well in terms of guided pathways and the transfer articulation agreements. But I would note that the Transfer Articulation Council has been left aside for almost 2 years, as all focus has been on students first. Rather than concentrating on changes which work and which seem to work, and I'll mention the guided pathways, you pointed out the importance that could have for both for retention at the level of community colleges, and it's of interest, of course, to the universities in terms of potential recruitment of those students directly into our majors. Let's work on that. Faculty Advisory Committee has taken initiatives to discuss with Merle Harris. In fact, we're meeting with her again this afternoon in an attempt to reanimate the Transfer Articulation Council. But the community college faculty were very clear. When I proposed that we restarted, they said they had been so burned by their mistreatment at the hands of the system office staff, who they perceive as railroading a plan which has no place for them in it, which cannot be reviewed and revised, and where we cannot identify strengths and weaknesses. I'm hoping that we can reanimate that transfer articulation, because that is an important achievement which we should continue forward. As to finally the question of the advisors, I tend to agree with Ben Barnes. We don't know what the results are going to be. Students are notoriously recalcitrant about going to see advisors, or if they see them once, they don't see them twice, or if they're given advice, they go and do something else. However, that may well be an improvement that can be done. I know that we're discussing it at my university as well. It's a dicey thing. One of the problems is often the advisors don't know the ins and outs of various programs in the detail that faculty do. But I leave that as a secondary aspect.
Thank you, David. Ari, you have a comment or question?
Yeah, I guess I would just kind of, I don't know if this is really a
Ari?
finance. Yeah, am I not coming through on audio?
Lou,
You guys hear me okay? Okay. Yeah, so
Ari, you have a comment or a question?
can you guys hear me?
Yes.
Okay. Yeah, Richard, I think everyone else.
We can hear him. Can you not hear him?
Yeah.
Oh, I think we lost Rich. Okay.
All right.
We
Well,
can hear you.
I'll just keep going then. So, and I don't know if this is a question that, that you folks can answer, but I wonder if there's any kind of insights onto what's driving, the dramatic decline in enrollment, over time. Clearly any solution needs to be a revenue and an expenses solution. I mean, anytime you see this much of a reduction in demand on anything, we're going to have to cut expenses and rethink. And it seems like we've done a lot of great thinking around that, and we've got some successes under our belts. So to commend you guys for leading through that. But maybe some thinking around what's driving the dramatic decline in enrollment. And I know that we're relying on guided pathways and PACT, to bring that back. And I just maybe some underlying causes and why we're so confident that these things are gonna turn around our enrollment problem.
Yeah, I'm happy to answer that question. Demographically, there are fewer 18 to 22-year-olds in this period, and we've lost market share, meaning that of the 18 to 22-year-olds that exist, fewer of them are choosing to come to our institution. So I think that's one of the primary problems and causes us to sort of examine how do we engage with adult learners who we know are needed to achieve our workforce goals statewide. It's an outcome of the State Planning Commission on Higher Education. In order to achieve our workforce goals, we need to have more adult learners get post-secondary credentials. So we really need to think about how do we engage with that student, and we need to revisit how are we losing market share among the 18 to 22-year-olds. And then thirdly, we really need to retain our students and have greater persistence. It's a real shame when we lose our students and they don't continue on. So that's really where I think guided pathways can be powerful in turning the curve.
And Carrie, I just want to kind of press a little bit on that just to try to understand, and maybe there's some place I can look up this data, so I don't have to go too deep on it. But there were sort of three negative trends there, right? The pool of applicants or potential students, we think is smaller, at least in what I would agree is probably our core demo, 18 to 22-year-olds. So that cohort is smaller. We're getting a smaller percentage of them, and more people are dropping out midway. So it's sort of the negative trifecta. Is there anywhere I can sort of sink my teeth into that data, like what that cohort looks like, and you know, just get some numbers around that? And do we have any thinking around how to retain the people that come with us and attract more of the cohort that is there to come to us? Sorry, it's a three-part question there.
Yeah, absolutely. Our institutional research folks have all that data, and our Vice President of Enrollment Management, Allison Buckley, has put a lot of thought and attention into improving these three trends and how do we turn the curve and get back to an enrollment level that's sustainable and helps align us with our mission. So we're happy to share that information with the board and with the committee.
That'd be great. I'd love to see that. And just on the last point then, you know, Carrie, is just, do we have thinking around, is there kind of initiatives to increase the cohort that does come to, you know, our great institutions and keep them engaged? I mean, I guess we did talk about the advisors and guided pathways as part of that, but is that kind of the big horse we're going to ride to try and make that work? Or
Let me answer that. Well, first of all, there's one other trend that I think is worth considering in this, and that is the economy. Community colleges have historically been countercyclical. So when the economy is strong and jobs are, you know, unemployment is low, participation in community college programs is lower because it's there's a trade-off between working and going to school. And that this time, and that coming up into up to the date of the pandemic a year ago, we were in a very strong economy with very low unemployment, and that was working against our enrollment on top of all the other trends. The economy has gone negative in a profound way, but because of the context in the pandemic of that, it has prevented us from realizing a sort of a normal counter-cyclical boom in enrollment, which we would normally expect when the economy was in its current condition with unemployment rates where they are. Some of the internal research folks who I've discussed this with, who are smarter at statistics than I am and pay close attention, believe that this will occur, that we are likely to see as we come out of the pandemic restrictions, but with the economy still not fully recovered, that we should see something of a bounce coming out of the recession. I hope that they are correct. I will say though that so that context I think is important to remember. The other thing is that one of the strategies we have to employ is affordability. Obviously, the PACT program creates affordability for a group of students who we think are a good group to have. I mean, they are full-time students who are seeking a cheaper way to get a college education. Generally, the full-time requirement brings in folks who are motivated to work through their college education on a full-time basis and probably have set aside the next few years to get that done. And we think that that's positive. But there's, later on the agenda, we're discussing tuition and fees. I think a general strategy of aggressive affordability is also one of the ways that we can continue to bring students in. Just because we've gone through this recession, I don't believe that I've seen other colleges and universities cut their price. We remain the best deal in town, and we should be trying to make ourselves an even better deal and really support our students' aspirations financially. That seems like, playing on our strength to build enrollment in the future seems to be the strategy that is before us.
Okay, thanks. To get that data, if I wanted to dig into that other data, I would go to the research group basically to get that. Is that how I would do that?
Yes, but if you'd like to, maybe not right after this call, because sometime over the next few days, if you wanted to give me or Carrie a call, we'd be happy to talk to you about what types of data might be the best to answer the questions you have, so that you can give we can put together a specific request for IR. We'd be happy to work with you on that.
Perfect. I'll do that. Thanks, guys. Appreciate it.
Can I ask Regent Jimenez to facilitate until we get Regent Balducci back, if you wouldn't mind?
Absolutely. Thanks, Alice. I do have a follow-up question, but I'm going to yield and see if there's any other regent that has questions or comments.
Well, I have another, but I've already asked, so I'll wait for
Yeah,
somebody else.
you and I are on bench, David. Okay, so no, I don't see any other hands going up. Let me just make this comment, Ben, for you to consider. I took notes as I heard from David Blitz and the concerns about the presentation that might be out there. And if I misinterpreted him, certainly correct me, but I didn't hear that there was criticism of the financial reporting in this, what I deem to be a financial report. I heard the first criticism about localization, the loss of localized curriculum control, to me seems to be, Dr. Gates, that seems to me to be an academic affairs issue that needs to be addressed, right? If we are losing department chairs and the control of local curriculum because our greedy finance folks want to save tons of money for the system, I think that it falls on you and the president of community college to talk about that kind of curriculum issue. So that's point one. And then the second point, and I'm going to turn it over to you, to Dr. Gates, is the concern about the elimination of college campuses in the future. You can hold me accountable for a lot, but not for the act of a future board. I see the concern perhaps down the road, but I'm not seeing in Kelly's report or in Ben's reports to date any suggestion of a profit or loss proof that each branch needs to make or they get shut down. I'm not familiar with anything like that in our architecture to date. So, Dr. Gates, could you speak on those two issues? Am I correct that those are far removed from what I deem to be a financial presentation?
Certainly, and I appreciate David's comments and observation from a faculty perspective as well. What I can say is, having worked with Students First staff at the system office, all of whom come from community college, all of them, not one, they're all community college. There's just community college representation. The issue of curriculum control, I do not find to be factual. It doesn't mean that the perception differs. So I'm very much willing to speak to that. The curriculum issues are addressed by disciplinary people in each of those areas. The system people have reached out, the staff, and requested input. However, I think here what is really somewhat difficult to reconcile is, while I acknowledge the perception exists, the community colleges have decided to not engage at all in any of these activities. They're not at the table. They've decided to pull away. I get dissent in a democratic process. We understand that. But very early on, we had representatives from every campus engaged. But there was a particular issue where I think there was some disagreement over governance, shared governance, where all of the unions and their members decided that they were going to do absolutely nothing. We want them at the table. So in terms of what we do to accommodate change, I've met with two groups recently. One, CSET, and I shared that at the FAC meeting. I will meet on the 12th with the mathematics group. Every meeting has resulted in modifications. Every meeting, we listen to the information, we listen to what their concerns are, we go back, send that back to the system office folk who are working on this, who again are from community colleges. I believe both sides are very passionate and committed to their mission. So it's not a matter of not listening and responding to these individuals, but I can say that there is no loss of curriculum among the faculty. because the action that takes place at the system office in no way shapes or acts upon the curriculum. It's moved to the local groups, and they're invited. It's faculty. There is no doubt that curriculum lies with the faculty, period. Everyone understands that at the system level, the local level, but one has to be willing to engage and then inform in order to find a product or a decision that meets both sides. So when one side says, look, I'm not going to be there, I'm not going to participate, but then certainly we listen to what their objections are. We're open and we're very much willing to work with all of the faculty here on the campuses. So that's what I can say about the curriculum. There is no disagreement. Curriculum lies with the faculty, period. And we have honored that. However, it's the disciplinary experts we work with, and they're represented by each of the campuses. Now, with respect to, what was the second one that David mentioned there?
Elimination of branches.
Yes, the elimination of department chairs, which in this matrix structure there are individuals who they've renamed the department chair role and included it in a different title. So I get that the elimination of department chairs in itself is startling, because all of us have come through traditionally structured institutions of higher education. So that in itself, but there are models out there where there are no department chairs. So this is not something that's so novel. It's the first time it's ever happened. There are other institutions that do not have department chairs. They either have heads, disciplinary, they're called different things. But what we should be looking at is the functionality. What is the role of that person that has been named within the matrix? So I think definitely that's part of it. I acknowledge the fear that faculty have that they are losing control or they have lost control of the curriculum. But in reality, they have not lost control of curriculum. So it's a matter of addressing and dealing with those fears and meeting with them, communicating with the faculty, and trying to resolve that disconnect between them. So I do understand that. And it's communications, in fact. We just need to communicate better. And many of us make ourselves more available to those groups. And we've been doing that, meeting with the FAC, the CSET, the CMAC for the 12th. So those are my responses. And they're not, I don't think in any way, I'm not just adversarial, controversial. It is just something that we all need to work on toward developing a more productive communication between our campuses. Someone said something today that was just really critical, and that is our system can't be great if our constituent units are not. So we recognize that and appreciate David's comments and are listening to the faculty. Thank you.
Thank you. Any other comments? I just have one quick one, Carrie, and that has to do with the slide that dealt with hires and retirements, et cetera, and the numbers. Can you just do quickly, because we've been on this for a bit, go over that for me? I just wanted to go over the numbers of 200. I think we were going to diminish by at least 200 by 2022 or whatever. Can you just do that one over for me, please? I know Ben had the slide up, and I saw the new hires was like 26, et cetera.
Yeah, I'm happy to talk about that a little bit. So we've taken a look, and it was reported at the February 16th Finance Committee. We took a look at non-faculty staff. So this excludes transfers, and we looked at hires and people who separated for all reasons, whether it be retirement, death, just leaving the system, and saw that over the period FY18 through 21, there was net attrition of our non-faculty staff. So in FY18, that resulted in 44 fewer positions, in 19, 30 fewer positions, in 20, 39 fewer positions, and in 21, 40 fewer positions. So cumulatively, thanks Ben, that's the slide there. So cumulatively over that period, that's resulted in 153 fewer positions. And again, due to the nature of these recurring savings, they build cumulatively into the future. So this has been the way that we have achieved savings better than our original forecast for Students First, because we've had this high level of attrition, but it's only through Students First and our strategic management of it that we've been able to refill at lower levels or not refill at all. So really, this has been the tool that we've used. As you know, during this period, the collective bargaining agreements precluded us from doing any kind of layoffs. And truthfully, that's not something we want to entertain. We'd rather manage through strategic attrition. It's a much better tool. So this is what we've built on. We have a model going out for FY22 that acknowledges that there's going to be a lot of turnover due to the incentives in the retirement plan. So folks have to leave by June 30th, 2021 in order to have an enhanced retirement benefit. So we built that into our assumptions, and then we assume in the period after that that there won't be quite as much natural attrition occurring in each year, because there will have, a lot of folks will have departed. We know that a third of our staff in the community colleges, about 30%, are eligible to leave. So that's very concerning. We think about succession management a lot and transfer of institutional knowledge. So we have to be very mindful of weighing the need to redesign our staff with also preserving that important institutional resources.
Thank you for that. My concern was that we weren't eliminating positions where people are losing jobs one way or the other. And from what I saw there, it is not that type of, it's through the attrition death movement elsewhere. So thank you for that. Thank you. Any other comments or questions on this issue? David?
Very briefly. Firstly, just in summary, I think that if we could make some progress to correcting the over-centralization and correcting what I've called the delocalization, and looking more at the regional aspect, which I've begun to see, that we could make some progress towards finding common ground. And that's an effort which both Kalina Sasanker, the chair of the FAC now, and I have been making for over a year, with meetings that we've had with inviting David Levinson, inviting Jane Gates, inviting others to the FAC meetings and having discussions with them. The numerical question, just following up on Ari Santiago's points, I'd like to know more about how many students are currently enrolled in guided pathways, which ones, and how many of those, I realize that the program has not been in operation for many years, but how many of those are completing their associate's degree and transferring to CSU universities? I think that would be very helpful to have that information, because that's an important point in terms of the transition from the community colleges to the universities. So there's not just the retention issue and the graduation issue, but there's the transition, the transfer issue. And so I'd like to have more information on that, if you could.
If I could just make a quick factual response to that. The Guided Pathways program is in development now, but is not in operation. We are, I mean, there are two components to Guided Pathways. One is the advisement, and the other is the establishment of pathways, which is a curriculum alignment question. The curriculum alignment question, I defer to others to speak to, but I know it's in process. The hiring of advisors and the implementation of that new program is beginning now. I know we are in the process of recruiting for Guided Pathways advisors and supervisors. We have a few people who are in place building the program, but I believe that we are currently planning to have Guided Pathways advisors working with students in the fall semester I believe the current plan is three of the colleges. So we don't have experience now from our system. However, there may be some we can try to identify some specific outcome information from other systems that have implemented guided pathways at scale and try to extrapolate from that if that's helpful to you.
Well, let me modify
Yes.
just for the
Yes,
transfer.
we can provide that. I'm sorry, David. We can provide that. What other institutions have seen the increase in retention as a result of fully implementing guided pathways, evidence-based. So there are several states that have done an excellent job there.
Let me just modify my request then. It's a transfer articulations then that I would be interested in.
And
I would appreciate the guided pathway information as well, but it's correct. I was using the guided pathway where I should have been using transfer articulation. And those have been developed before students first. Right? That process began 4 years ago. So we should have some data on that.
we do. We have data on the transfer articulation. And the initial one, what I saw recently, and I thought we had moved it forward to you, shows the greatest number of students transferred to Central. So we have all of that, and we have it by disciplinary areas there. So we can get that to you.
That's what I'd like to have.
I think we asked for just additional information that perhaps Regent Harris may have been waiting on, but I can send that to you within a nanosecond.
Thank you for that. Thank you. Thank you. Thank you. Other, I'm sorry. Sorry.
Yeah, my bad. I was on mute there. Hey, Ben, I just want to ask you just one quick question because I think it came up, the idea that the central core budget has been growing. And I feel like we've covered that sometimes before, that although it looks like that in some ways, a lot of that money is actually going back to services at the campuses. Do I have that recollection correctly?
Yes. Well, that has always been true to some degree, in that we, for instance, starting in 2000, I know there have been some, I've heard criticisms that starting in 2018, I believe was the year, there was a large increase in system office expenditures. That was the year in which we began paying for our major software maintenance and operation through the system office as a convenience, because we were able to negotiate more favorable pricing as a system, and because it was we had a unified contract and it made sense for us to be paying for that from one place rather than making 12 finance directors pay 12 separate bills. So that has always occurred at some level, but with shared services, we are included in the shared services budget are activities which benefit the campuses and which previously had been funded out of campus budgets. So, there are 20 or so payroll staff who previously had been more like 25 or so payroll staff at all the different colleges. Several of them left. The remaining ones were consolidated into a payroll operation paid for out of shared services. But those are the same payroll processing expenses that the campuses had been paying out of their operating budget forever. So we've simply moved these back office functions into the shared service organization. We're still in discussions now about exactly how can we present that information in the budget you're going to be considering later this spring in a way that is accurate and transparent and makes it clear which of those services is being moved into the center. But that's been as these things have been put in place, the presentation of the budget has been modified to accommodate that. And we're still looking at ways we can improve that presentation to make it clear that those services are in fact services being provided directly on behalf of the college campuses.
And in my understanding was in the same way by the same people at the local campus. So it's really more about where the reporting is, not really so much of this rapidly growing, core system office budget, correct?
Yes. I mean, I freely acknowledge that there are adjustments that need to be made. People have a different name and phone number to call if there's a problem with their paycheck than they had before. And actually, nobody sitting in their original campus. They're all being done by people sitting in their, spare bedrooms. But that's actually, in a way, been a blessing for us. It reminded us that the work we do in the electronic world that we function in has flexibility. There's no reason you need to be sitting at Norwalk Community College to make a change to the college savings deduction for a Norwalk employee. You can do that from any place where you have access to the computer systems that are running this. So,
Thank you for that. Oh,
I'd
sorry, go ahead.
like to add that, for the current fiscal year, the original board adopted budget for the one college was originally for 88 staff with a combined PS and fringe benefit cost of 14.8 million. But through prudent fiscal management and by delaying and deferring hiring, we were able to reduce that cost to 8.5 million this year, a savings of 6.3 million or 42%. So, we've been managing to budget and below budget.
Okay. David. I'm sorry. David Jimenez, do you have a question? Did you raise your hand?
Yes. I guess my takeaway here, Ben and Carrie, is that, first of all, the financial presentation, I think, is among the best I've ever seen, making the fiscal case for student first. If I had a question about why did we do it, and is it really delivering, I think your presentation is a terrific overview and compelling. But what I would urge you to consider with Dr. Gates and Alice and also with David Levinson is the fact that the fiscal case alone for Student First is not the only case that needs to be made, right? The issue of local curriculum control and regionalization and management of that sort of tension has to be delivered on in order for the fiscal soundness of this to make sense to take on, right? You can save $100, but if in the process you burn up the company, that's not useful. So I think your presentation shows the savings and shows the prudence, but I think that there should be another avenue for either our academic affairs folks or for David Levinson or whoever to deliver on the fact that separate and apart from the sound fiscal argument for Student First, that on the issue of curricula, we have a plan that is equally as compelling. And that has to be made not by the finance folks, but by others. And I hope that is forthcoming as well. And the fact that community college folks aren't participating, while it's very troubling, is not a ticket out of that challenge, right? We have to overcome that. David Levinson and team have to address that. So I hope that our other committees that are focused on academic and curricula are taking that issue on. Thank you, Chairman Balducci.
You're welcome. And I think David Blitz had made the comment that they are meeting with the academics committee, with Merle, et cetera, to do, I think, just that type of thing, if I'm correct in that assumption, David Blitz. So I think we're moving forward in that direction. We've spent a good almost an hour on this information item, and I think it was well spent. Comments and questions back and forth. It's the kind of thing that we as a group and the public needs to know. So I thank all of you for your time and effort on that. And I think it was well worthwhile. I would echo your comments, David, on this presentation. Okay, since we are done on this particular item, I'm going to ask then that we move forward on the federal stimulus fund update. And I think, Ben, you have that information for us.
Chairman Balducci, if I may,
As
Yes, I'm
a perfect
sorry.
segue, good morning, friend. As a segue into that discussion, I liked how Regent Jimenez and you kind of framed the work very necessary that happens in collaboration and as kind of the focus of various committees and areas of support from the Board of Regents with faculty and other stakeholders. And I hope that that very articulate message that you both shared just now will be taken into considerations as we review, comment, assess to what Mr. Barnes is going to share with us shortly, so that during and after each of these communications that again are about finance committee matters, of which all matters are attenuated or directly related, that we keep our comments and inputs to the subject at hand, lest these meetings take lives of their own and veer to paths that won't be particularly constructive.
Thank you.
My share.
Appreciate that. Well said. With that, I would turn it over to Ben again on stimulus funds.
Thank you very much. I'm going to, there was a table that was provided in the packet that you all received. I will share it just so that you can have it in front of you if that's convenient. Did that work? Oh, there we go. Okay. So just to remind you that we have received a number of different categories of federal assistance. There's something called the HEERF, the Higher Education Emergency Relief Fund, which was established in the CARES Act. And then a significant supplement was added in the what's called the CRISA, the Supplemental Appropriations Act that was passed in late December of 2020. And those are what I'm going to report on you today. I will acknowledge that the House of Representatives in Washington is contemplating, is considering and likely to pass the what's called the ARPA, the American Rescue Plan Act, which includes additional funds, significant additional funds. So we have, but that hasn't passed yet, and we're only now beginning to understand the requirements of that new law. So I want to catch you up on where we are with the first two rounds of stimulus, so that you're aware of what we're looking at. The HEERF 1, which is on the screen now, from the CARES Act, amounted to $54 million, $55 million, which was divided up between student assistance and institutional aid. And it was 50-50. So those second and third columns are the same. Because each college's allotment had to be split between those two. So far, we have used up the student financial assistance. We're short about $100, but that will we won't leave that on the table. I promise you, we're going to spend every penny. So we've already provided student financial assistance under the CARES Act. We've used some institutional funds so far last year. Some of those may have extended into the beginning of this year, but we've used about 13 million of those institutional funds, most of which, I'm sorry, I'm missing a total. I forgot about that, but the bottom piece doesn't have a whole lot in it. Those were used for replacement of refunds that were paid by the universities last year. You'll recall last spring. That's the $13 million used there. Now we are still holding on to about $13 million of institutional aid for colleges. We are developing right now the backup to support a drawdown of that $13.4 million of institutional aid to the colleges to fund adjunct faculty who taught online courses in the fall. We believe that's an appropriate and eligible expense under the CARES Act. The rules have changed, and we're allowed to apply the new rules to the old money, but only during the new time period. So we're going to do our best to recover some of the losses that we incurred last fall with the HEERF 1 institutional funds, and that will allow us to fully expend the CARES Act. On the second page, this is the new money that was made available in in December. Again, there's about $108 million of that. About 80 is for institutional, and about 27 is for student financial assistance. We are planning to give out the entire required amount for student financial assistance in March. So the universities are developing, they are essentially using a very similar to what they did last year, where they pay a grant to every student, and the grant for students on Pell is higher. And that is in process now, and I believe will be paid out later in March. We are also doing the same thing at the colleges. You may recall last time we gave out student financial assistance at the colleges equally to everybody. So everybody who we could, count as eligible got the same grant. This time we are required to have that be needs-based. And so we've developed an approach in which we provide a grant to everyone, but a significantly higher grant for students with financial need who are on the Pell program, or even among those on the Pell program, for those who have the most acute financial needs. So there will be sort of 3 levels of payments that reflect student need within the colleges. We are planning to mail those checks out starting on March 22nd, which is coincidentally is my birthday. I won't be receiving one, but it will be my pleasure to send out $13 million to some needy students starting on that day. We are also planning, we've set aside funds for some IT projects that we believe will help us respond to the pandemic and to meet the ongoing needs of students who will continue to have, I hope, a greater variety of teaching modalities available to them through our system in the future. We are also going to provide campus-based allocations for spending above and beyond what they've currently budgeted. So we're making $10 million available to campuses for them to invest in coronavirus responses that they believe will be most effective in their particular circumstances. That's just beginning to be developed. We've begun to ask our campus CEOs to identify their local priorities for those funds. That leaves, the anticipated revenue loss at the colleges. We're still awaiting guidance on how to calculate revenue loss, even though that's allowable under the statute. But we believe that the $6.5 million is a very solid estimate of what we can absolutely justify for the spring. Unfortunately, the way we work, most of our revenue comes in the fall. So spring revenue loss is not as great as we experienced last fall. That leaves right now, as things look, about $27 million, $28 million available for operations or student financial assistance next year. We have until March of next year, February or March of 2022 to spend these funds. So we may be able to get an extension if necessary, but I imagine that this will put us in a position to have a significant array of student financial assistance and institutional supports in the event that we continue to have revenue losses or pandemic-related expenses in fiscal 22 next fall. So that's our current plan for expending these funds. I will tell you, we will draw down as much of the money as we can once we know their rules for use of these funds, institutional use of these funds this spring. So the $6 million that I have here for anticipated revenue loss or other reimbursements through June 30th, if there's any way for me to increase the size of that, I will do so. That will allow us to essentially shore up our reserves to an even greater extent. And those funds would then be available for use in the future. That would reduce the amount of grant funds available in the fall, but I think that still is a prudent approach. So I just wanted to make sure you all understood our general approach right now. Obviously, every time we get new guidance from the federal government, we revisit and see whether there are new opportunities or there's some of the things that the plans we had need to be modified. And I will keep you apprised as those modifications occur, but this is where we are today. Mr. Chairman, I'm happy to take any questions.
Thank you, Ben. I have a quick question, and this may sound silly, but the PERF 1 and 2 programs, the 54 million and the 108 million, that 54 million isn't included in the 108, it's additional, right? The 108 plus the 54, correct?
Ben, you're muted.
Forgive me. Yes, that's correct. They are two separate programs and they are additive. And they interact with one another in several legal and procedural ways, but I don't need to bore you with all that detail right now.
No, but
The amounts are additive, one on top of the other.
So we're actually looking at $162 million roughly ballpark from the two.
Correct.
And how much, just for my edification again, how much are we sending for student aid again in each program? 27 million out of PERF 1, is that correct?
Yes, and actually the law was written so that the amount we have to spend, the minimum requirement on student financial aid under HERF 2 is equal to the amount under HERF 1. So we sent out $27 million for the first round. We did mostly last spring, although there was some additional rounds in the fall, both the colleges and universities, to make sure we fully expended the funds. And then we're doing it again this spring. So we will have given out $54 million by April or May, depending on how long it takes for all that funding to be pushed out the door. Now, we can use more than the minimum, and I expect we ultimately will, but it seems like a good idea to satisfy that legal requirement now, given the needs of our students and the sort of expressed intent of the legislation.
Okay, thank you. Thank you. Other questions by members of the committee? If not, thank you, Ben. Thank you very much. Carrie, thank you very much. Appreciate both the inputs that you folks have given to us over the last hour and a half. The action item we have before us is CSCU tuition and fees for 2022, which is actually, if it's a bright spot, it's at least a good spot for hopefully for our students as we move forward. There haven't been very many positive things that they've had the opportunity to see over the last several years, particularly the last year. And this one will be at least a shot in the right direction, if that's the correct terminology, but it's a positive. At any rate, Ben, would you delve into that wonderful item?
Yes. First of all, I need to ask for your forbearance. We sent out a corrected version. I realized that I had neglected to delete a sentence in the staff report that was a holdover. I cut and pasted and used the prior year staff report as a template for my report. So there's an inadvertently left in reference to last year's increase for the university. So we've sent out a corrected version, and that will be included in the board packet. The proposed tuition and fee package that you have before you is, in broad strokes, a tuition and fee freeze for tuition and mandatory fees across the entire system. So we're proposing a 0% increase in tuition and mandatory fees for the colleges, for the universities, and for Charter Oak. There are a couple of minor exceptions to that, minor fees where there are some changes, and I'll quickly go through those. The staff report provides more detail. Within the community colleges, in December, the board adopted a policy related to student refunds, and included in that policy was the establishment of a new fee called a late drop fee. This was because we significantly eased our requirements for refunding student tuition and fees in the event that they are unable to attend classes. But because we wanted to retain some level of incentive for students to withdraw in a timely way in order to leave that seat available for other students who might want to sit in it. And also to help us plan our course schedule with a little bit of time. We implemented a late drop fee. We have learned after that was adopted that there are some limitations within our banner system that make the structure of the fee as originally proposed very difficult and costly to implement. And so this proposal changes it from being a $75 per course with a cap of $200 per term. Cap allows those fees to be covered by a subsequent year's Pell Grant. We've limited it to $50 per course, which because implementing a term-wide cap was going to be very costly and time-consuming in our relatively convoluted banner system. So this is a simpler version of that fee that we think is substantively the same as what was adopted, but the numbers are different. We have also are recommending an increase in the transportation fee from $20 per semester to $40 per semester. This is based on our ongoing negotiations with the Department of Transportation around the UPass program. There is a legislation pending before as part of the governor's legislative program. It's in the workforce bill that requires that the UPass program cover its expenses. The Department of Transportation has indicated that in order to comply with that, they need to raise the price of the UPass from $20 a semester to $40 a semester. It's a steep increase, although it remains a wonderful deal for students who use the UPass because it's much cheaper than 3 or actually 6 months worth of train passes or bus passes. So we continue to think it's a good deal. They have also committed to making some enhancements to the program, electronic fares and better data collection and some other. They've made some route and service improvements that benefit our campuses, particularly in Northwestern and Eastern Connecticut. So we are recommending an increase there. The resolution also allows us to expand eligibility in the UPass program to cohorts of students, either from institutions that don't currently participate or to incorporate graduate students or non-credit students. Our tentative MOU with DOT that we're working on now would allow us to bring cohorts of students into the program each year if there was demand for that. So that the resolution allows us to expand this with the concurrence of campus leadership who would be impacted by that. So if Southern, for instance, wants to include their graduate students in the program, there will be an opportunity for them to do that, and the fee would apply to those new cohorts of students. There are some smaller changes, particularly around the universities have eliminated or significantly curtailed their online learning fees. There were previously charges per course that was offered online. We have waived those during the pandemic, and the general consensus is that those are not productive or useful to our program and our development of alternative teaching modes. So they have either eliminated it or reduced it to being a once per semester rather than a per course item at each school. There are a couple of minor lab and equipment fee changes that are extended or elaborated on in the staff report. And otherwise, I believe it is a tuition freeze proposal before you today. I can't hear you.
Thanks, Ben.
Rich, you're muted.
Yes, thank you. Yeah, I think that one of the issues is it looks like you're going to save money even with the increase in some of these fees. And I think the key that you made in this report, Ben, is that many of these increases, the way they are done, would make them eligible for financial aid, whereas before they were out-of-pocket dollars, which they just pay and lose dollars on, which I think is a positive thing. Is that correct? You're muted, Ben.
Yes, I'm sorry. Yes, there has certainly been a trend. I know last year we did that with a nursing fee, nursing materials fee, and there are several similar examples in the changes at the universities that allow for those expenses to be covered under financial aid. So I think that's positive, but they're relatively minor at this stage. Where I'm always willing to. I think it's definitely advantageous to, if there are required costs for education, to include that in the tuition package so that it can be considered alongside of the financial aid and other things. Transparency about how much it costs is very challenging in higher education generally, and I certainly would like to keep all the costs on the rate card, so to speak, whenever we can.
Thank you, Ben. Any other comments or questions for Ben on this? I think that I'm using David Jimenez's takeaway. The big takeaway is no increases generally, no increases period in tuition, no increases in the general fees that we've had. The transportation fee is a fair one, I think. It's still a steal for the students for what it costs for transportation. That one at Central and Western, I think, and the others if they wish to use it. And the other fees, which may be eligible for financial aid as to the out-of-pocket position, is positive too. But freeze overall on tuition and fees, I think, is a positive for all of our students. And I'm sure faculty and staff will be happy to hear that also. Any other comments by any members? David Blitz, yes. You're muted, David.
Sorry. Yes, I am happy. That's good news for tuition and fees. I just have a quick question about the online fee. Now it is only charged to students, I'm talking in particular for CCSU, but it may be the other universities as well. It's only charged to students when they actually take an online course. Would the modified $58 one-time fee be charged to everybody? Or would they be charged only to those students who, when they take one online course, would not be charged additionally if during that term they took a second?
My understanding is that fee is going to be charged to take any online. That would cover all online courses that they would be taking that semester. So a student who is taking all courses on ground, I do not believe would be charged for that. And I'll confirm that. If I'm incorrect, I will send out a note.
Thank you. Other comments? Okay, I would ask for a motion on the resolution, for adoption of the resolution, so that we can make presentation to the board at our next meeting. Is there a motion to adopt this resolution on the freezes for colleges and universities?
So moved.
Thank you, Felice. A second?
Second.
Ari, thank you. David? All those in favor, signify by saying aye.
Aye.
Opposed? Thank you. The resolution's adopted. There is no other business to come before this committee today. Any closing comments or questions by any members? Hearing none, then I would ask for a motion to adjourn.
Motion to adjourn.
Thank you, Ari. Second. Felice, thank you, Felice.
Second.
All those in favor, signify by saying aye.
Aye.
Opposed? Thank you all.
Thank you. Be well.
Thank you. Be well. Have a good one, everybody.
Thank you.